Hello friends, welcome to Civil's Right. My name is Avinash Agarwal. In this video I will be discussing with you a very important topic. So India's rupee, the Indian National Rupee INR, has been depreciating quite rapidly and quite consistently over the last couple of weeks and months. Now the problem is that this depreciation of rupee, what is the factors or what are the reasons which is causing this, and can RBI take actions to stabilize India's exchange rate? This is the broad topic that we are going to discuss in this particular discussion, and we'll be using an article which has appeared in the Indian Express as a mechanism to guide this discussion in the right direction. So see, it's not that the first time that India is experiencing a depreciation of its currency. First of all, let us get some facts out of our way, some definitions out of our way. What is the meaning of the term exchange rate? Exchange rate basically denotes the number of units of foreign currency that one has to pay, right, to get, let us say, 1 unit of domestic currency, right? So, for example, if we speak in terms of dollar, right? So, if I have to purchase $1, right? So how many rupees do I have to pay? Do I have to pay 85 rupees or do I have to pay 90 rupees? Right? So that is, for example, the exchange rate of dollar vis-a-vis rupee. Similarly, we can say that, let us say, if you want, somebody wants to buy 1 rupee, right? So how many dollars do they have to pay, or how many cents that they have to pay to get this 1 unit of rupee? So that would be the exchange rate of rupee in terms of dollar, right? So exchange rate is basically the money that you pay to buy a unit of a currency, right? So typically whenever we are talking about rupees exchange rate, right? So we are comparing the value of rupee versus the value of dollar. That is what we are doing. That to purchase 1 unit of dollar, how many rupees are required, right? So as of now, we are at a stage where you have to pay upwards of 90 rupees to be able to buy $1. There was a point in time, long time back, when you had to pay maybe 60 rupees, 65 rupees, 70 rupees, 75 rupees, 80 rupees, 85 rupees, and today more than 90 rupees you have to pay to be able to buy $1. So the idea over here is that these kinds of episodes have happened earlier. What are the triggers, right? What causes these kinds of episodes? Are the factors which are causing depreciation external to the country? What do I mean by depreciation? So this movement, right, from, let us say, 80 rupees to 90 rupees to 95 rupees, right? So this kind of movement in exchange rate, that is referred to as depreciation. That the rupee is becoming weaker vis-a-vis dollar. The rupee is becoming cheaper vis-a-vis dollar. The rupee is losing strength vis-a-vis dollar, right? So the idea over here is that this kind of depreciation was also seen in 2008, around the time of global financial crisis. This kind of depreciation was also seen around 2013. That was a different time, different era. If you are not aware exactly what I mean by taper tantrum, so that's okay, you will learn over a period of time. But the idea over here is that whenever there has been financial uncertainty or economic uncertainty globally in, let us say, important economies such as North America or European Union, so that has reflected in the exchange rate of developing countries such as India, right? So whenever there is an external shock, maybe an external financial market related shock or external geopolitical conflict related shock, which creates a lot of uncertainty, in such a scenario, typically it is seen that the exchange rate of India, right, it will depreciate, right? So these are external shocks. There can be domestic factors as well, right? Like for example, inflation, which is what do you mean by inflation? A general increase in the level of prices. So if, let us say, inflation is on the higher side, that means that the general increase in the level of prices is faster than what it should be. That means that, महंगाई बढ़ रही है, prices are going up. In such a scenario, also you will see that there can be depreciation or there can be pressure on the rupee, downward pressure on the rupee. Similarly, having a current account deficit. What do I mean by current account deficit? Current account deficit basically means that essentially you are importing more than what you are exporting, very very broadly and very simplistically speaking. So if you are importing more than you are exporting, that means that you are spending more than you are earning. And any economy which is persistently year after year spending more than it is earning from abroad, then that essentially reflects that you're not able to do that kind of production, and you're essentially running some kind of a deficit because you're spending more than you're earning from abroad. So these can also be the reasons which can explain why depreciation is happening. Now the author is trying to say that external factors are what they are, right? So the current external factors may be related to the war in West Asia, right? But there are always internal factors also that need to be taken into account, right? And that is what the author is going to talk about over here, right? That if you look at this period of January to December 2025, in this period US dollar has weakened quite a bit. When I say dollar has weakened, what do I mean? That the dollar has lost its strength, right? That the dollar has become cheaper vis-a-vis other currencies, right? So if I, for example, compare dollar with euro or dollar with yen maybe, or dollar with pound maybe, so dollar has become cheaper, dollar has lost its strength. But that is not the case when you compare dollar with India, even in this time frame. So even in this time frame, when dollar has lost its strength, right? So the dollar has lost its strength. You can see from here that the dollar index has come down. You can take this as a topic of discussion amongst yourself, that what is the meaning of the term dollar index, right? So even in this time frame when the dollar index has come down or it has weakened, even during this time frame, rupee has depreciated against dollar. So had dollar become weaker and rupee remained as it is, so the movement should have been, let us say, from 85 to maybe 80, right? We should have gone from 85 to 80. That earlier it was costing 85 rupees to buy $1. It should have costed 80 rupees to buy $1 had the dollar index weakened and rupee remained as it was. But that is not the case. Despite the fact that the dollar has weakened, rupee has still weakened. That means that had dollar remained as is or had dollar strengthened, the depreciation of the Indian currency would have probably been much more greater, right? So that's what the idea is, that rupee is a minority, right? If you compare rupee with that of, let us say, Thai baht or the Chinese yuan or the Korean won or the Taiwanese dollar, so these countries have not depreciated the way the Indian rupee has depreciated, right? So Indian rupee has depreciated a lot. Other currencies which have depreciated a lot is Indonesian rupiah as well as the Vietnamese dong. So we are not exactly bracketing ourselves with the strongest currencies right now. We are a very weak currency is the idea, right? And you have to realize that this time frame, this January to December 2025 calendar year, last calendar year, this is kind of a Goldilocks phase. What do I mean by a Goldilocks phase? It's basically an English phrase. It essentially means that a lot of favorable factors have come together. So during this time frame, your GDP growth rate was in the right direction, your inflation was very much controlled, your current account deficit, right, it was there, but it was not very wide, it was not very the gap was not very large, so you were still importing more than you were exporting, both goods and services combined, but it was manageable, right? So the idea is that even during this time frame when we were reasonably doing well for ourselves, still you saw that the rupee weakened by 5% or more than that, right? Why did this happen? That is the real question that we need to try and understand, that what is really happening. Now there is a lot of capital outflow that is happening from India. What do I mean by the term capital? Right, capital essentially can be said to mean as money. So there's a lot of outflow of money. Now who is pulling money out of India or pushing money out of India? So it is the foreign portfolio investors who typically invest in Indian equity, in government securities. That money is going out of India on a net basis. foreign direct investment on a net basis is also going out of India, in the sense that there are companies who are investing in India, but there are Indian companies who are investing equally or more abroad. So on a net basis, foreign direct investment, which is basically a factory kind of investment, that is also been negative every now and then recently. And foreign portfolio investment, which is basically share market kind of investment, that has also been negative on and off, right? So that can be one of the reasons, which is capital outflows. Another reason, as per the author, is that a lot of money has come into artificial intelligence related companies and sectors. So wherever artificial intelligence play has been mature, a lot of foreign inflow has come into those sectors or into those companies. In India we have a lot of startups. There is a lot of noise around artificial intelligence in India, but as per the author, the artificial intelligence play in India is not exactly very strong, as a result of which we have not been able to cash in on this AI related investment trend. And like I said to you, that if you look at domestic capital, let us say the capital owned by Indian companies or Indian corporates or Indian business families, so they are also investing a lot abroad, right? So that's capital outflows that we've already discussed. So see, you have to understand something from a theoretical standpoint, that if foreign portfolio investors, rather than putting money into your country, are pulling money out of your country, so essentially that means that they are not putting dollar into your country, they are pulling dollar out of your country. So if they are pulling dollar out of your country, essentially what that means is that dollar will become expensive. That if it was earlier costing 80, it will cost 85, it will start costing 90, it will start costing 95. Why? Same as tomato, right? If instead of pushing tomato into the market, I start pulling tomato out of the market, then eventually there will come a point in time when the prices of tomato will increase. So from similar perspective, you can understand what is happening to the rupee, that rupee is depreciating or dollar is becoming expensive because dollar is becoming scarce, right? Scarcity is basically one of the very important phenomenons discussed in economics. Dollar is becoming scarce because it is being pulled out of the country, or it is being pushed out of the country. So FPIs, maybe they are withdrawing their dollars, they are withdrawing their investments from India for whatever reasons. We can discuss about that later. Similarly, Indian corporates are pushing dollars out of the country by going and investing abroad for their own business reasons, right? So essentially the submission of the author is that when we are looking at the current depreciation trend of the rupee, we must not squarely and completely say that okay, this is because of the West Asian crisis. The author is saying that there are real fundamental macroeconomic factors at play that we need to take into consideration, right? If you see over here, right, if you look at the behavior of dollar more recently, right, so you will see that investors have become risk averse, meaning that they do not want to invest abroad in risky locations, so they will find safe havens. So they will take their money, let us say, back to the US, or they will take their money back to their home countries where they find more safety, more comfort, more psychological comfort. So the dollar index has strengthened, meaning that the dollar has strengthened, and when dollar was weakening, that time rupee should have remained stable, or it should have strengthened. That time also rupee became weak. When dollar has strengthened, rupee has continued becoming weak. So the exchange rate has gone as low as 94.65. Now what can central bank such as RBI do in such a scenario? See, for example, if I again give you the example of tomato, so if let's say that the prices of tomato are going up, so what will I do? I'll try to increase the supply of tomato so that the prices of tomato can be contained, so that the prices of tomato can be stabilized, as simple as that, right? So similarly, what can RBI do if they want to stabilize the price of dollar? They do not want dollar to become more expensive. They do not want dollar to start costing 100 rupees, right? Because that would be tremendous depreciation, right, for the rupee. So if the RBI doesn't want that to happen, so what will RBI do? RBI will increase the supply of rupee. RBI will increase the RBI will increase the supply of dollar in the market, right? So that is what RBI will do. It will increase the supply of dollar, and RBI has been able to manage depreciation in the past, right? RBI has been able to manage. Like for example, in 2013, where there was tremendous depreciation pressure upon not just the Indian currency but a lot of domestic market, a lot of developing market currencies. So at such a point of time, RBI could intervene in the foreign exchange market and stabilize the exchange rate. Will RBI be able to do this? Will RBI be able to do this? That is the real question, right? But the point over here is that what you cannot deny is that there is a definite exit of capital that is happening, right? Whether in terms of FDI, whether in terms of FII, that exit is definitely happening. Is it happening because of loss of confidence? Is it because the growth prospects are not as great as we would like it to be, right? So even if, let us say, RBI temporarily increases the supply of dollar and it stabilizes the foreign currency, or it stabilizes the exchange rate, will that necessarily mean that everything is going to go back to normal? Maybe not, right? That's what the whole idea over here is, that there may be some respite, right? There may be some moderation, there may be some rahat, there may be some comfort, right? But like I've been trying to discuss through the medium of this article, that our currency's problems, the Indian rupee's problems, are not necessarily linked only to the West Asian crisis. It may mean a confidence crisis. It may mean a deeper crisis, right? Because see, the Indian economy is growing at 7%, right? Our inflation is not out of control. We are far away from runaway or double digit inflation, right? We are very much within limits of what is considered normal. So still the currency is depreciating. So that's what you need to understand, that's what you need to start questioning, right? That is it only the West Asian crisis? Is it only the Ukrainian Russian war related crisis? Is it only Donald Trump's import tariff tantrums which are the causative factors, or are there deeper macroeconomic factors which we need to look at? Why is it that consistently FDI is going net FDI is negative? Why is it that foreign portfolio investors are pulling money out of the country? Is it only because they are getting better returns elsewhere, or is there a deeper problem? Is our unemployment rate to be questioned, right? Is the purchasing power of the Indian masses to be questioned, right? Is the fact that India's manufacturing sector, the industrial sector, is barely able to contribute 12 to 13% of India's GDP even today, after Make in India and everything else, is that also one of the factors? So are there deeper factors at play which is indicating the weakness in the rupee? That is what we need to be able to question and be able to think about. That's it. See you again. Thank you so much. All the best. Jai Hind.